it is the reputation of the business that remains intact. And I don't think in the Indian stock market there is a better example than Piramal Enterprise for this quote of Warren Buffett, right? So they were excellent with their pharma business, and so they have these two dramatically opposite business which they cater to. Pharma business is one where all the bad news comes in first because you have to do all the heavy lifting while creating capacity, right? You also have to make sure that the capacity is ready for your customer. They will come and inspect, and then after several years, you will probably get a big order, right? So, जो भी bad news होना होता है वो पहले आ जाता है because it will hurt your it will show your assets has been fixed asset. You'll invest a lot in fixed asset, but the revenues will take time to come, right? So all the bad news comes first and then the good news comes much later. Financial business is completely opposite of that pharma business. In financial business, what happens is the good news comes first. It is so easy to grow your loan book, to just give loan, to tap into a market where you think that you can grow fast, but it is equally or probably much more difficult to get back that money from the people whom you have lent to. And nobody understands this better than Piramal today, right? And we will cover that in the subsequent slides, what happened with them in the financial business, right? So pre-demerger, this was the scenario, how they were invested in financial services business and Piramal Pharma business. There was a Carlyle as an investor who invested during the COVID time in Piramal Pharma business. And in fact, they made a clause that we will only invest in Piramal Pharma under a condition that you will separately list it as a separate business on exchange. And that is what Piramal has done now. Over the last 2 years, they have been able to hive off this pharma business and separately list it in the stock exchange, right? So pre-demerger, both these businesses were together. And post-demerger, what you can see now, there is completely two different businesses. And this is how the shareholders and promoters holding can be seen. In case of the financial business, there is retail lending, wholesale lending, there are alternatives and investments. Whereas in case of Piramal Pharma, there are four clear businesses. One is CDMO, the other is hospital generics, then the India consumer healthcare, and the last one is ophthalmology, right? So now, what went wrong in the financial services business? This is very, very, very important for today's webinar because this will not only help us understand what went wrong in Piramal, but it is also a very good case study for us to look for in any financial business, be it NBFC, be it banks. If they are growing too fast, what all areas we should look at? That is much more important for us, right? This I have taken from their August 2018 presentation. And why August 2018? That was the time when they basically the ILFS crisis hit. And prior to that period, Piramal was doing exceedingly well in terms of increasing their loan book. There were people or there were suspicions on the quality of asset, but they have been able to consistently keep their NPAs low. And even Ajay Piramal was seen quoting in all his con calls that they have one of the best asset quality in their business, right? That is what was known to the layman or a minority shareholder at that point of time. And you can see here, in case of lending, predominantly their lending book was wholesale oriented. They have kept investment in Shriram Group in their retail business. But if you look at it objectively, that is not a retail business. They have just made some investment. which now they are anyways, they've already liquidated their investment in Shriram Transport Finance Company. And for the other two Shriram Group businesses also, they have been very clear that they will be liquidating. So you can't call that as retail business. So if you keep aside that investment part, 97% of their book was wholesale. That was the scenario in 2018. And if you would have heard the commentary of the management, they were gung-ho in all the con calls, in all their media appearances, right? So as I said, if you ignore their investment in Shriram Transport, 97% was wholesale. And even in the wholesale, 75% was real estate. That means builder loan only, no housing finance, granular loan to end users and all real estate developer loans. That forms 75% of the total book. And how did these RE loans look like? You can see here: private equity, mezzanine lending, construction finance, lease rent discounting. So all these loans were given where the construction is yet to happen, right? A very, very, very minuscule of that portion was actually where the construction has already happened and then they have provided the loan. So that is the kind of risk these kind of loans carry, because construction, can be delayed due to variety of reasons, because of market problem, because of government related some issues, or developer related any problem. And since they were focused, or they were having concentration on a few developers only, that is where they faced a lot of problem. This is Ajay Piramal. See, we have tremendous respect for Mr. Ajay Piramal, and this is by no means we are trying to demean him. We are just trying to observe as analysts, right? Our job as investor is to objectively look at what the management is saying and what is happening on ground. So I have highlighted a few parts here. Q2 FY19. What he says, I'll not read the whole part. I'm just reading the highlighted part. Best in class risk management practices, independent risk and legal teams. Deals that we do are secured and 100% of the deals have escrow over the future cash flow. Best in class asset quality. Our gross GNPA ratio has been below 1% for more than 10 consecutive quarters. And we have been conservative, and that is why we have maintained a provision of 1.7